Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello, everybody. My name is Min, and I'm your host from NDIS Property Australia. And this is the SDA Housing Podcast show explains, highlights, guides, and brings awareness about all things SDA in this ever-changing in this world. Kevin from Paramount Disability Homes, how are you?
I'm good, Min. Thanks so much for having me again.
Back in Box Hill, my favourite location in Melbourne.
Every time. Welcome anytime.
Today's podcast topic is going over last week's webinar that you did, that you and Jonathan did with Debbie from our office, the SDA Hotspots in Melbourne. Just want to see how it went, what happened, some of the highlighted topics that you covered, the red line, the blue line, whatever you covered as well. Yeah, how'd it go last week with the webinar?
Yeah, it was great. I had a really good turnout. We got good feedback from the event as well. So a lot of people found the information quite useful. Again, we're just here because we want to support more participants in being able to find the right housing in the right areas.
Have you ever had to present a webinar or a presentation to anyone out there about the hotspots for SDA for either participants or investors out there? Have you ever done that before?
Never in that kind of sort of sense. We've always had, individuals come and ask us where certain areas are good, but we've never really put it in a presentation. So it was really nice to, visually explain to potential investors where the good spots are, where to avoid, give them that visual aid.
Yeah.
It was great.
Well, the reason why it was a good idea to do as a webinar, is because one of our clients was a developer from Byron Bay who wanted to come into the Melbourne market to look at doing a handful of projects as developments. And they engaged our service team in Brisbane to do a nice detailed report over a couple of weeks to figure out what kind of top 20 suburbs he should consider for development. And then from there, we asked you about it. And then we all obviously said maybe good to do a webinar on it as well. So that's why we did the webinar. I keep saying podcast. I meant the webinar. So Kevin, what did you cover on your PowerPoint slide? Give us like a 5-minute summary, please.
Let's sum it up really quickly. So we went through each of the sort of Melbourne West, Melbourne North, Melbourne East, Southeast, and we gave a few recommendations of where we think there are really good opportunities for, SDA developments and where to sort of avoid. So we drew red lines on the borders where we think you shouldn't pass as an investor. And so that I can go through sort of each.
Yeah, talk about them. Yeah, please do.
Sure. So we start off with Melbourne West. Now, Melbourne West, obviously, the general sort of story that everyone tells is avoid greenfield areas. And that's, the main advice that we have as well. But that's not to say that there isn't a large population of participants that want to live in the inner western suburbs. Now, the data suggests on the SDA demand data from the NDI suggests that there's still a lot of participants in the west that are looking for housing. So we would say the cutoff sort of line would be, Caroline Springs.
I remember that line touching it. Point Cook as well. So a lot of participants do like living on that coast as well in the west. I wouldn't go past Point Cook. So Altona Meadows, Altona's great. Williamstown's great. Sunshine, St. Albans, Footscray, all really good areas. I wouldn't go near Truganina, anywhere past, Truganina. Truganina is probably the cutoff as well. Kevin, when I talk to builders and developers, they often talk about, that location should be villas, that location could pretty much be apartments, they want to be more houses. Do you guys as an SA provider talk in that language to builders and developers yourself, as in like Essendon? That'll be apartment market, far out in greenfield areas, definitely houses. Boronia, definitely see that villas. I mean, do you talk like that in your daily speak with your team, also with supervisors and participants as well?
Yeah, more or less. I think we have a general sort of feel on what is in that area. For example, if we already know there's an apartment complex in sort of, let's say, Footscray, then we would probably want to avoid having another apartment complex in development. So we have to be aware of what's being developed in that area as well. And I'm sure your team at NDIS Property Australia, in your reports, you'll have a look at what's sort of in the pipeline, what's existing and being developed in that area. But yeah, every location, depending on the SIL providers, depending on participant demands, we would suggest apartments for some areas, houses for other areas, villas for other areas as well.
Are you seeing a lot of villas come to the market as stock?
Oh, 100%. Yeah.
Ratio-wise, I mean, I personally haven't seen many villas myself. Yeah. Because I'm across Australia, but you guys in the Melbourne market, like, what's the ratio between houses versus apartments versus villas? Do you think, is it 1/3, 1/3, 1/3? Is it, what are your rough numbers you're thinking of the ratio?
If we're talking about sort of middle ring, so like if we're talking metropolitan area, I think the majority of the market is definitely still apartments. If we're talking about roofs, but less housing. I think investors are a little bit smarter now when it comes to development. A lot of investors in the past 6 months have started on doing villas. So villas are the easiest to procure because, you can have a lot of the villas that we see have their own separate OOAs, and it allows for 3 different SIL providers to be on one site. So they are easier to fill than houses because they have that individualized living space just like apartments do.
So speaking of villas, Kevin, what areas around Melbourne would you like to see more villas being built? Top 3 areas.
Top 3 areas. So I'll go back again, and I think the best sort of area to develop is on that Lilydale train line, or anywhere sort of in that Melbourne outer east area. So Croydon, Bayswater, Boronia, we think that's a great area and a great opportunity because it not only captures that northeast region, but it also captures that southeast region. You meet sort of in between, and there is a high group home density in that sort of Knox Council as well. So sure, that's where we would go if we had build villas. Yeah.
Okay, that's villas. What about small apartment complexes? Where's your favorite area to have those being built?
Apartment complexes. Well, I think if you're building apartments, you can probably move a little bit more on that inner to middle ring of Melbourne. I'm thinking there is not much apartment action in areas like Burwood and Glen Waverley, Monash. We're not seeing too much as well in the northeast. So Doncaster, Warrandyte, Templestowe, that area, there isn't too much apartment.
Speaking of Glen Waverley, I remember about a month ago, you and I talking, and I said, look, Glen Waverley, Chadstone, Clayton, they seem to be like beside each other, one little area.
Yes.
And I said to you, can each of these suburbs handle one project per location, or is there too much in Clayton or not? What are your thoughts on demand and participants in those 3 or 4 suburbs next to each other there?
I think it can be done. I had a look at the vacancy data in the city of Monash, and there's only 1 room in that for apartments that's vacant. So extremely low vacancy rates in that area. I personally think that they're their own sort of hub. So Glen Waverley and Monash, there is still Glen Waverley and Clayton, there's still a bit of a distance between those 2 suburbs. They all have their own sort of health hospitals and nearby hospitals. So it'd be sort of a different pool of participants as well. There's certainly enough demand in that area to support for, 15 apartments in each sort of suburb.
Sure. So going back to the webinar presentation you did, what other things did you cover in that? Location-wise?
Location-wise, I'll talk about the north as well. So just to have a quick recap, I would probably avoid going past Epping in the north. I'd probably also avoid going past South Morang. So some really good areas that we've seen and we have currently managing SDA properties are Broadmeadows, Thomastown, Glenroy, Greensborough. Look, our go-to in that area would be housing. We've seen a lot of participants that are wanting housing in that area, a lot of old government stock housing also in sort of the Reservoir, Brunswick area, and they're willing, it seems like they're willing to move up a little bit further up north, but yeah, just not past Epping and South Morang.
Part of our notes that we did for our other research for our client, we did these top 20 suburbs, and I won't read the whole list out, but the summary of it all is a lot of inner east, northeast, outer east, southeast. Is definitely the east, part of Melbourne. Do you see and feel the same way?
Oh, 100%. The one challenge with the East is it's definitely the most expensive area, or it's generally more expensive than the price. And the other issue is that it's usually quite hilly, and it's pretty hard to find good sites in the East. So anywhere sort of past Box Hill, it starts to get a little bit hilly. Yeah.
What other areas, I mean, on that presentation you did, there were the no-go, your preferred no-go zones.
Yeah.
What other areas to be aware of?
The no-goes?
Yeah, like Dandenong, yes or no?
Dandenong's okay.
Yeah.
I wouldn't go past too much further past Dandenong, so I would avoid areas past Cranbourne. Berwick's okay for us. Berwick's been quite strong. So
isn't Berwick a tightly held suburb? Not much apartments in them. Is it an older suburb?
Older suburb, but it's in the city of Casey, and it's further past Dandenong.
Sure.
But areas like Narre and Berwick are still quite strong. Anywhere along the coast in the southeast, I would say, is still very strong, all the way down to the peninsula. So Frankston, Mentone, Carrum, Seaford, Patterson Lakes. You just really want to avoid that Casey council when you start from Cranbourne, because there is a lot of sort of stock in that area, and participants typically living in the inner southeast, the general consensus is that they don't really want to move past Dandenong.
Yeah.
But if they're living on that coast, they don't really want to avoid that coast. Everyone loves living alongside the beach.
Now, in our list of top 20 is also Bendigo.
Bendigo, yeah.
What are your thoughts on Bendigo, please?
So Bendigo is an interesting sort of area because, not many sort of volume builders ever developed in that area. So it possesses as a really good country town. It's quite a big country town suburb that has a lot of potential and a lot of demand for high physical support and robust houses. So we have a couple of projects that we've pretty much already aligned expression of interest from participants to move into a house. So it'd be up there in terms of country sort of areas.
Yeah, gotcha. On a side note, Kevin, this morning while I was in Melbourne here, you sent me off to a meeting with a developer in South Melbourne, inner city, who had 6 luxury completed SDA properties. And before I went to the meeting, I asked one of the girls in the office to do some calculations on income matrix mix of HBS versus FA versus IL for 2-bedroom, one tenant funding, and then 1-bedroom, 1-tenant funding, and then 1 to 3 house funding and 1 to 2 house funding. And I was quite pleasantly surprised to see that the 1 to 2 house funded HBS was $139,000 a year per person, which was higher than the 1 to 1 2-bedroom, 1-resident HBS apartment funding, $122,000 versus $139,000. Wow, the location factor of 1.37 has a massive impact on this income. So we always talked about in the past, it's always hard to get apartment funding participants, but if you ever get a house funded person, then it's okay. In this regard here, in this scenario here of these example, which is for these 6 luxury apartments, $139,000 for 1 to 2 funded HBS, that's massive.
Oh yeah, it's huge.
Yeah. You told me about this site, this developer. Tell me more about this. You've been to visit it and looked at it?
Yes.
What's your thoughts on this luxury SDA inner city, which I think is probably one of the best SDAs in town around the place because it's built and it's there?
Yeah. So I mean, look, I think SDA apartments the sky's sort of the limit with these things. So, just like any residential apartment, you've got different levels. And so you've got levels at entry and sort of on the cheaper end, and you've got really high-end apartments. So very boutique sort of style.
And by the way, this is West Melbourne, which is the suburb West Melbourne, inner city,
Inner city, So beautifully designed 2-bedroom apartments, and all the finishing in the apartments are, top tier in terms of building materials. So I definitely think that, sky's the limit, and which participant doesn't want to live in something that's, designed really, really nicely. So we're seeing more and more and better designs of apartments. And, it's good to see that developers are, the requirements are some of them have to put in the disability design DDAs. And if they're already, going through that process, they may as well just do SDA. So we're seeing a lot more boutique apartments that are getting developed now, salt and peppered through existing developments. And a lot of these developers are happy to hold on to these, apartments as well.
Yep. Gotcha. Looking at our notes here of the report, I sort of read it out because it's back in Melbourne here. Melbourne in SA4, located in the heart of Melbourne, is a bustling urban region with a population of 617,000 residents, total residents, 21 census. It is home to approximately 9,370 NBS participants, with 367 of them funded for SDAs. However, a significant portion of these participants, approximately 125, are still awaiting suitable SDA housing. For this analysis, it's important to distinguish between legacy, existing, and new build dwellings. Legacy builds, which are older dwellings housing 6 or more tenants, will be defunded within 10 years of the SDA rollout, which is probably another 4 more years. With existing dwellings often failing to meet current SDA build standards and may also be phased out over time. The focus, therefore, is on new build and pipeline dwellings which meet modern SDA requirements and participant preferences. So back to those numbers, 367 funded already for SDA, plus another potential 125 waiting for SDA housing. Actually, no, 125 waiting for suitable housing, sorry. Yeah, so that's just inner Melbourne right there. That would cover probably like Brunswick, Coburg, Darwin, Essendon, Melbourne City, Port Phillip, Stonington, Yarra. So they're areas that would require, obviously, probably apartments to be built because they're high density areas there in Melbourne, Because obviously land costs too much to require and build a house on there, that's all.
Well, Essendon North, sort of Pascoe South, that's still inner. Those areas could be potential housing development areas, but besides those, it would be probably too expensive to develop housing.
Sure. Yeah, so what other points did you get out of the presentation with Debbie?
Well, yeah, I think I had a lot of investors that asked a few questions on whether they're currently living in a house and they've on a 800 or 1,000 square meters, they're living in a pretty decent area. And their question was, is it possible if I can put a granny flat or a villa in the back of my house? And the answer is yes, we can explore that idea because it's honestly a great idea for investors.
Do you see many granny flat or villa builds in the back of houses?
We've seen more and more, but probably only a handful so far.
That would be family homes, parents in the house and a
participant that's there.
What about new build houses with the villa granny flat at the back? Do you see those much at all?
That's a great idea.
Yeah.
So you can live in the front of the house and then you can develop a villa at the back of the house and it just pay off by itself. But yeah, I think there'll be more of those because, a lot of participants in the inner areas, they want to live by themselves as well. They don't mind living in the back of a nice, in the back of a normal block. It's quiet, it's private. So more and more investors, if you are living on an 800 to 1,000 square meter block and you can fit a villa in the back, I think you should definitely consider potentially putting an SDA on the back.
Yeah, exactly. Before we finish up our little podcast here, any advice that you may have as a SDA provider to our listeners who have investment in Melbourne or thinking about jumping into the Melbourne market? Any advice you have, given the the no-go zones, the red lines as you call it, advice that you would give to any incoming investor?
Yeah, I think definitely just do your due diligence. It's a big investment that you're going to do, so it doesn't. If you spend a couple of grand and doing your research properly, seeing and getting investment advice from whether it's your company, whether it's another company, but really understanding A, what the current demand in that area is, B, what's being developed in that area, looking at the pipeline, and just doing the feasibility correct is super important.
I love what you're saying, Kevin. The reality is so many investors do not do that homework. You've experienced so many calls from selling agents who've already sold stock. You've experienced so many calls from investors who've already bought off other selling agents the last year, 2 years. And I can understand the frustration you're going through in your head as a provider, wondering why the hell did you even buy this to begin with? What is your feedback to all those listening who have empty houses or have bought in areas where they will end up being empty? Give us your feedback on the experiences you've gone through with dealing with these people.
Yeah, it's definitely been really tricky. I mean, we've had to spend a lot of time explaining to, these investors who put a lot of money into these products and help them understand how everything sort of works in the space and come up with a solution.
But Kevin, if they bought in a in a spot which is past the red line, as you call it, what can you do? I mean, it's oversupplied, there's minimal participants there. There is no solution, is there, really? I mean, if you bought in a good area before that red line no-go zone, then directly those numbers of participants who are looking for housing should be there, and the demand should be there, and you should be safe in ending up with a tenant or two. If you're in those bad areas, there is no solution, or is there a solution?
So housing can't help everyone as well. So we can only help a handful of people. And I feel that other providers are probably thinking the same issue, because, there's no amount of active work that we can do to really help the situation. If at the end of the day, if the participants don't want to move into those areas, there's nothing we can do.
And maybe in time,
yeah, sort of after a few years, if there are less development in those areas, and those areas, if they've got new amenities like hospitals and new shopping centers, then there may be potential. But in sort of the next 6 to 12 months, it's quite hard to see if there's to give a solution to every sort of nest.
Well, the good news is we recorded the webinar that you did with Debbie, Kevin. So if anyone wants to watch it, we'll put the link in the description below, and you can watch the full hour presentation there. But thank you so much for your time, Kevin. It's good to catch up with you in person in Melbourne here. And if anyone wants to reach out to the boys at Parent Disability Homes, assuming you're not past the red line, then feel free to reach out. Kevin, what's your office number and the website you guys have here for your company?
Yep. So our company email would be admin@paramounthomes.com.au. And I'm doing something cheeky. I'm just actually going to search up our office number, because I should know it at the top of my heart. Our office number is 03 9999 7418.
Cool. Okay, ladies and gentlemen, that's our wrap up. Kevin, thank you so much for your time, and we'll talk soon. Bye-bye. Always.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.